This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Starting the show is K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen, as they chat about the overall grain market and then take a closer look at wheat and grain sorghum domestically and internationally. Daniel and Guy continue the show as they discuss corn, soybeans, the U.S. dollar, and freight. K-State meteorologist Chip Redmond in today's show as he explains how the lack of precipitation around the state is becoming more concerning and if it will change. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you very much, Shelby.
Daniel, today talking through the domestic and international market because of some recent reports that have come out. And so what reports did we see recently, and what's the overall picture we're seeing in the market?
Well, the WASD World Ag Supply Demand Estimates report came out yesterday on April the 9th. Also, there's a crop production report, although there weren't any measurements in the field with regard to wheat or any of the major crops coming on. Really, the fireworks or a lot of the attention-getting reports will start in the May WASDE and NASS reports, May the 12th to be exact. So honestly, this is sort of field work time. We're spraying, putting fertilizer on for spring planted crops. Not a lot of changes. We did see at the end of March, a couple reports that will have an impact on those May reports. And again, so during May, we'll have both the old crop 2025-26 marketing years for these various major Kansas crops. That'll be reported on again. The wheat report, or the wheat marketing year ends May 31st. The spring planted crop supply demand balance sheet marketing years will start on September 1st. So I wouldn't say we're in a lull, but we're waiting to see what happens. Of course, at the end of last month, we had the prospective planting report. So a question that we're teed up to answer will be how will the numbers out of that last month's prospective plantings report influence or be reflected in the May reports coming up. And it's almost assured that the USDA will use the corn, soybean, grain, sorghum acreage numbers that we'd seen coming out and wheat acreage numbers that we'd seen coming out of that prospective plantings report going forward. Now, one thing that we didn't see a lot of change on that we could have in some other years and other situations were there's a quarterly stocks report that also came out at the end of last month. And, there were some minor changes there. And I think that was reflected here in terms of minor changes. As we talked about before we came online, really, if were any major changes in these what are now old crop current supply demand balance sheets, it was some switching around of crush and exports in soybeans. And when you dig down into the details of the class by class analysis for wheat, there were some changes there in terms of percent stocks to use by class. So again, we'll talk about that. Overall, not a lot going on. Really, if anything, has the attention of the market. It's really more so some of the international factors that could come into play. And Guy will talk more about that later. Guy, before we go on, any thoughts on that? Is that kind of your view on what we had out of this report?
I think just want to emphasize the importance of those quarterly stocks reports. There's sort of a chance to draw a line in the balance sheet and reconcile particularly any demand uncertainty. Usually that's reflected in feed and residual, but that is a good check whether the tank's running half empty or half full, and it lets you reconcile those balance sheets quarterly.
June 1 will be important at the end of June, but a lot of times where you have a truth-telling moment is when you get to September 1st or December 1st stocks numbers, and then they kind of know what their usage has been, and they look back and say, well, gosh, something's out of whack. Were we off on the crop itself? So that's where the excitement can come in more so.
And from these recent reports, wanting to talk to these different commodities internationally and domestically, and kicking off with wheat domestically, Daniel, what are we seeing?
The supply-demand balance sheet had almost no changes, really just a small increase in imports, about 5 million bushels. And out of that, again, just minor changes on seed usage, et cetera. Basically, the ending stocks number up slightly, about 7 million bushels on 938 million. Ending stocks to use up from about 45.9 to 46.3%. So small change. And really, the USDA projected the price of wheat, marketing year average price, up 5 cents from what it had before, from 4.95 now up to 5. So really very small changes for hard red winter wheat. What we're most concerned about in Kansas, we do grow some other varieties here, but the main scale predominance, of course, is with hard red winter. And we had stocks to use coming out of that last marketing year, 24-25, ended up at 61.7%. This year we're at 58.35, so a little bit of an improvement, but still saying that for every 100 bushels of hard red winter wheat that we used during the 25-26 marketing year ending May 31st, that we had a little over 58 bushels still in storage. So that's no wonder we've been lagging a bit with regard to where hard red winter wheat markets are in the U.S. Guy, how about the international side?
Well, the big news in a relatively uneventful report was in wheat, and it was in the bearish numbers and the increase in world ending stocks for wheat. And it's sort of reflecting the fact that the U.S. is the residual store there. Only minor changes in the U.S., as you talked about. Some of the notable adjustments in the world situation. The EU was increased, production was increased by 1.1 million to 145. That's 24 million metric tons higher than last year. That's a 20% increase, which is significant. Russia was increased just under a million metric tons to 90.3, and exports were raised proportionally, 45.5. At the other end of things, Ukraine was reduced by a million metric tons. India was reduced by 4.8 million metric tons compared to March. And I wonder if that might temper some of the exports for India, because they have put out some export permits for this year, but it sort of shows things a bit tighter than we expected. Look, raising those ending stocks to use sort of numbers on the wheat globally, and that's hanging on the market, which after the report sort of brought the market down 5 to 7 cents before the close.
Also going to touch on grain sorghum. What are we seeing domestically for that crop?
Still a continuation of expected pace to get us to 225 million bushels of exports for grain sorghum. We've had a recovery in that pace the last 6, 7, 8 weeks. That coincides pretty closely with China agreeing with the U.S. To bring in both soybeans and grain sorghum. And last year we were at 98 million bushels, so sharp improvement. The year before that we were at 234, so it's really been an up and down situation. Really no other changes in that supply demand balance sheet. The tail for sorghum will be, well, it's kind of a two-sided deal. That there was a projection of lower acreage in the U.S. and in Kansas for sorghum. We'll see if that holds up, given what's happening in fertilizer market and some other dynamics. See if that goes forth. And Guy, I just on the just one carryover comment on the wheat. I know the world is quite optimistic for wheat and really for sorghum, for all these grains, for the coming year. But I look at the drought maps and I see some awfully dry areas, especially Europe, Eastern Europe, Western Europe, the whole bunch. So there's still a lot to be dealt with. I would say that there's some discussions amongst our climatologist friends about later summer weather patterns that could through the central U.S. that offer some risk, but yet it's too soon to go rattling your saber on crop problems this summer. Still, I guess I would say when we get the May supply demand balance sheets for these crops and start watching weather as it comes through, that affects both the U.S. market and the overall world market. Guy, any comments?
Yeah, just on the sorghum, at the moment, we're starting to see that Australia and the Argentine crops start to come off. So we're having to compete with those Southern Hemisphere markets at the moment, particularly into China. Also, just on your weather comments, yeah, the longer term forecast is for a fairly big El Nino to come setting in. And that's probably expected later in the year. Is it going to hit us at the tail end of this crop year, or will it be harvest? Latest reports I'm reading, India is sort of expecting a weaker monsoon season, and that definitely has an impact on their grain production. And then some drier weather looming over Brazil and Argentina as they're finishing up their crops and starting harvest down there. So a bit of weather creeping in there.
That's what's exciting about the weather, about the world grain markets, that the weather is so primary to the amount of supplies that we have to meet the ongoing demand. So we'll see. Most of the time we have normal weather or thereabouts, but X% of the time, is it 20, 25, 30% or more? You don't get that. And then the market gets surprised and we scramble. So we'll see where that all goes.
Do we see the USDA take into consideration the international weather as they're putting these reports together?
Their mode is always to assume whatever got us to April 1st, they assume normal weather all the rest of the way. They don't assume a drought or a lot of more moisture than normal. They assume normal, and that's what they hold to. I think they'll take into account the internationally, probably the information they have in hand. But I think unless they do something different, Guy, I think internationally they're of the same thought there. What do you think?
They just really don't project any weather into their forecasts at all. It's pretty much a snapshot of spot conditions. And as you said, they assume some sort of normalcy. Even if they're in the middle of a drought type situation somewhere, they remain the proverbial optimist that they're going to get some rain tomorrow. And I don't think they really look at those longer term weather patterns at all. And that's sort of the dichotomy between the private sector and the government sector on that.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Daniel and Guy as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our show with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen, as we continue our discussion on the grain market. Last segment, we discussed wheat and grain sorghum, so picking up on this segment with corn domestically, Daniel, what are we seeing?
No changes in the supply-demand balance sheet other than a 5-cent increase in the projected price for the old crop marketing year ending August 31st from $4.10 up to $4.15. Again, pretty steady as we go, steady Eddie until we get to the May report. Then we'll bring in the 26-27 marketing year estimates. Again, that'll start September 1st, and you'll have the projected acreage about 95 some, down about 3+ from where we were last year. So that'll be a big thing to watch. Subject to change coming in the acreage report at the end of June. The question on the table is how high fertilizer prices might affect these plantings for all different crops. And fertilizer prices, again, because of some international factors largely, Guy can talk on here in a minute on in the energy market, anticipated to really hamper or to have a negative impact on corn. So we'll get that May report projecting what corn acres we have. It'll follow without question the USDA report that came out on from NASS here at the end of March, but probably good to dial in 1 or 2 million acres less as a strong possibility given the fertilizer deal. As it sits right now, we'll have probably a little lower acres than had been anticipated. Projection of yield 183, I believe, is what they have. USDA had coming out of their February ag forum projections. So we shall see. Very likely to have lower numbers that ultimately than we that'd be my opinion is we're very likely to have lower numbers than we ultimately see coming out of the upcoming May report. As far as domestically, that's kind of where we stand. We still maintain strong expectations for fuel usage for ethanol. Given what's happening in gasoline market, move to E15 year round, that's likely to be of help some. Although the transition can only move as fast as we have pumps to handle E15, so that'll be an issue at play. But Guy, what about the world side?
Well, domestically, it was basically unchanged. World, just a few changes in there. Ending stocks increased 1.1 million metric tons. Combination of both Russia and South Africa increased their corn production. Export forecasts, little change. Always like to look at China. Imports remain unchanged at 8 million metric tons, and not too many issues on that. Just to come back to the stability in the Middle East and your comment on fertilizer, we did see crude oil drop $20 a barrel, both on the West Texas Intermediate as well as the Brent crude on the announcement of the ceasefire in the Persian Gulf, which was significant. Coming back to the comment on fertilizer, I sort of get the feeling those supply chains for urea fertilizer particularly are running pretty thin and pretty empty, and it's going to take a number of weeks to recharge those, even if they do gear back up. And I think a lot of those, particularly the nitrogen coming out of the Middle East, is going to be slower. That said, of the major producing countries, the U.S. probably gets more of their nitrogen locally rather than in that Middle East sector. Also, we're a bit more forgiving if we don't put that nitrogen fertilizer on. Unlike soils in Brazil, Western Australia, even Argentina, they don't have that fertilizer. They just don't get a crop response on that. And they rely on that fertilizer really heavily on that. So maybe a late application if we see a pop in corn price. Although the corn was unchanged, we did see USDA raise the price for corn by a nickel. So a bit more optimistic on that.
What are we seeing for soybeans?
The only balance sheet for major crops that had a significant change, we basically added 35 million bushels to the projected crush of soybeans, took away 35 million bushels from projected exports. That's for this old crop marketing year. Be really curious to see what happens when next month when they trot out their updated projections for the 26-27 marketing year. But with all that, we did see a dime increase in projected prices for soybeans from 10.20 for this marketing year, $10.20 up to $10.30. So really that's the pattern that we had seen coming out of this report for wheat, for corn, for soybeans, is to have a nickel to a dime increase in prices, but almost no change in the supply-demand balance sheet. Just thought-provoking how crush is taking off from 2 years ago, 2.285 billion bushels. Last year, 2.445 billion bushels. This year projected at 2.61 billion. And you see an increase. It's been kind of an up and down, but pretty strong biofuel usage projected for soybean oil. In this marketing year, we were almost 13 billion pounds used 2 years ago, 26.9 last year, now projected to 29 billion, 350 million pounds. So, that's moving to the higher side. That's in terms of that's domestic disappearance, biofuel, 14 billion pounds. I was also looking at the wrong line, guys. Sorry about that. And the price for soybean oil up strongly, up 4 cents a pound for 50, projected to be 55 in the March report, 59 now in the April report. So again, reflecting strength in that market. No change in exports, so it's all domestic use. That's pulling it up. Soybean meal also. It's a crush issue. You have the domestic demand pulling crush forward and spurred on by the oil underlaying with fuel demand, and then soybean meal with more supply coming on because it's tied in with that crush. Guy, you're an Illinois native. Do you have any comments on the crush margin and what you see from your native state?
Yeah, well, that 10-cent increase, I think that's a modest part of the domestic premium to export that the crushers are starting to pay. Looking at the AgCash crush margins at the moment, they're historically very high. And I know they're running over capacity, putting in overtime, crush as many beans as they can now. Would see a bit more upside to soybean prices if these crushers get a bit hungrier in there. But that's good to see, being driven by that demand for domestic biofuels there to the point. We just hope it brings that soybean price up a little bit. Otherwise, you'll need to buy some ADM stock to capture any of that, I guess. Moving over to the world situation, not too many changes there. Imports into China, 112 million metric tons unchanged. Crush was holding steady at 108 million metric tons. That's with soybean meal consumption holding steady, but I see the Chinese government put a release out this week trying to encourage their pig producers particularly to sort of wind back some of that soybean meal consumption. And and maybe lower that in the ration. Keep in mind, 60% of the world's pork or pigs sit in China, and that's a big chunk of that whole feed demand on that. So really not too much else to add on that on the oilseed side of things.
So, Guy, when we look at the international market, what's impacting it? Maybe thinking of the U.S. dollar and freight.
Well, just similar to crude oil, the U.S. dollar dropped 160, 170 points on the announcement of the ceasefire there 2 days ago in the Persian Gulf. That should be quite supportive of commodity prices, grain commodity prices anyways, with that sharp drop in the U.S. dollar. We'll see if that brings any export business to the table on that. And it's been pretty steady at those lower levels, about 98.8 since then. So we'll see if that carries forward. Ocean freight, sort of a different story on that. While tanker freight's been quite volatile, dry bulk freight's been surprisingly steady. Not too many changes on that. And it's currently at a cheap enough level. We're not too freight disadvantaged to those higher cost freight destinations from our competitors on that.
Guy, if I can add in, so they're having negotiations. These have always been very difficult negotiations. And I know both parties have strong opinions on what they want to see come out of that. So now there's an opening now. The markets have dropped, probably buying opportunity, but there has to be concern that, hey, if these parties walk away from the table, they don't get any and they don't accomplish something acceptable to both, that then you've got the other side coming back in a couple of weeks. What do you think on that?
Yeah, well, particularly with that area of the world and with the Iranians, they're known for not necessarily sticking to a deal very well. I'm sure there's definitely a contingency plan there in place. And in the same vein, from a marketing plan, I'd sure have a contingency plan there as well, because it's not unusual for those initial agreements and arrangements not to hold. We just hope that they can get that settled down and work out a deal for letting that flow of oil come out of there. The thing we need to keep in mind, it's not just the Iranian oil, but when you shut down that straits there, it shuts off a big chunk of Saudi Arabia, Qatar, Kuwait, United Arab Emirates, and a good chunk of Iraqi oil there as well. So the impact of the flow through the Strait of Hormuz is significantly bigger than just Iran.
Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you very much.
That was K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we end our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, when we look at this past week for Kansas weather, what did we see?
Overall, temperatures still running above average for a majority of the state. We did have some colder areas there on Easter morning. I know in our neck of the woods in northeast Kansas, we had some frost. And, not abnormal for this time of year. And we typically see the average last freeze around the 22nd of April, though. So we're way ahead of normal to just be getting frost every once in a while. That should be something that's happening later in April, where, temperatures been running anywhere from 10 to 15 degrees above normal. And both for the high temperatures and the low temperatures, we should be somewhere in the mid to upper 60s with lows around that 40 degree, upper 30 degree mark. So overall above normal. And, we still touching the 80s and the mid to upper 70s. And we've had some pretty dry conditions across the state. The drought monitor this week reflected that as now over 85% of the state is at least abnormally dry. That's an increase of about another 10%, unfortunately, this week. And we saw the moderate drought really expand. Over 50% of the state is now in moderate drought, and that's an expansion of it, again, another 10%. There was some slight improvements in areas that saw the heavier rainfall late last week. In the far southeast and far northeast were just one category improvement. Unfortunately, not enough to take the deficits that we see right now, we definitely have some longer term drought concerns, especially southeast Kansas. But when we look at the grand scheme of things, it was needed moisture for the folks that did get it in eastern Kansas. However, we need a lot more. And that's why the drought is expanding. And that's because, we're getting earlier than normal green up. I was just kind of looking at some wheat growing degree units just for a baseline. And they're running a month ahead of normal, almost statewide for growing degree units. So typically wheat in central Kansas, just as an example, should be at about the joining stage right now, maybe even just shy of the joining stage. Well, it's already at the boot stage for the growing degree units, and we're already seeing observations in the field verifying that we're running a month ahead of normal for growing degree units on wheat. And just think about that for the rest of the state, and especially the east that has seen a little bit of moisture. That means things are really progressing fast with green up. What was slow to green up is now accelerated due to the precipitation, but that means we're using more soil moisture now. And using more soil moisture quicker means we need more moisture to come in here and replenish these deficits. And we're already drier now, at least in and around the Manhattan area, as an example, than we were before the rain last week because of that vegetative use of the subsurface soil moisture. So definitely going to get into a place here if we don't get some precipitation quickly.
Are we going to see some precipitation when we look in the forecast?
Yeah, the forecast looks pretty optimistic, with almost everyone having a chance of showers and storms almost every day through the next week. That's not going to happen. I think a lot of folks are going to struggle to see widespread precipitation. There's definitely going to be some dry areas, most likely the ones that are most favored for that, the west and portions of central Kansas. And unfortunately, we're going to end up with a much more active weather pattern with bigger storm systems by early next week. And I'm afraid that's going to bring in some fire weather risk as well, especially for the western third of the state, where they've gone anywhere from 50 to 90 days without wetting precipitation. So we're not out of fire season yet, especially for the western part of the state. Eastern part of the state, they're going to be on the wet side of that dry line that's going to be kind of favored somewhere in central Kansas for a lot of next week. And I think we'll see episodes of severe weather and potentially high-end severe weather on a few days, maybe Tuesday and Thursday, where we just got to be aware of all the hazards possible, and hopefully we can squeeze out some decent moisture. Again, going to be favored mostly in the far eastern part of the state.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.